Return to gold. How is China planning to eliminate the dollar?
China's gold strategy is shaking the dominance of the dollar. A historic turning point is taking place in the world's gold markets. In recent months, the price of gold has exceeded $4,000 per ounce, setting new record highs. Experts regard this not merely as an investment trend, but as the beginning of a new global economic balance. According to Bank of America analysts, by 2026, the price of gold could reach $5,000 per ounce, the highest real value since 2008. Behind this process, economic analysts believe, lies China's gold policy and its strategy of independence from the US dollar. Over the past 2 years, the People's Bank of China has increased its gold reserves by 2,300 tons. This is seen as one of Beijing's most active steps towards strengthening its currency, the yuan, in international trade, and reducing dependence on the dollar's influence. Experts note that this process brings twofold benefits for China. First, geopolitical protection, since in an era of growing sanctions risks, gold serves as a politically neutral asset.
Speaking of financial independence, China is distancing its foreign trade and credit systems from the dollar and creating a new gold-backed economic mechanism. According to London School of Economics scholar Roger Mitchell, by accumulating gold, Beijing is not only protecting itself from inflation, but also forming a global economic front against the dollar. The international power of the dollar rests more on trust than on economic fundamentals, but that trust is weakening. Countries such as China, India, Saudi Arabia, and Turkey are shifting their reserves into gold and other currencies, which is reducing demand for US bonds. This increases the risk of dollar depreciation. As a result, dollar inflation is rising, and even the US domestic market is coming under pressure. If confidence in the dollar continues to decline, it could trigger a financial crisis even stronger than that of 2008, says Morgan Stanley analyst Eva Grant. As investors increasingly view gold as a safe haven, this trend also reflects the instability of the financial system. Against the backdrop of geopolitical tensions, including the war in Ukraine, unrest in the Middle East, and the Taiwan Strait crisis, investors are moving away from the dollar and credit currencies towards gold. However, this growth is not balanced, but rather represents an outflow of escape capital.
If the political climate becomes stormy, the price of gold may also face a sharp decline. If the two countries take the initiative to create a gold-based settlement system, this could further accelerate the shift of the economic power center from the West to Asia. This means that for the first time since the Bretton Woods system, gold is returning to the core of the international financial order. The world is moving back toward a gold standard, but this time the center will not be the United States, it will be Asia, emphasized Liang Chao, an economist at the National University of Singapore. The sharp rise in gold prices is not just a normal investment cycle, but a signal of a new economic system. China's gold policy is calling into question the global dominance of the dollar. Asia is strengthening as a new financial hub. If this trend continues, between 2026 and 2028, a new golden era in the world financial system may begin, but this time it will form in the heart of Asia.